Good afternoon. I will call this regular meeting of, or pardon me, this special meeting of Council of the Municipality of Jasper to order for April 30th, 2024. It is 1:30 p.m. Our scheduled start time. We have an agenda before us. As it's a special meeting, it's difficult to change the agenda unless there is unanimous consent to any other business. Barring that, is there a councillor prepared to make a motion to approve today's agenda? Deputy Mayor Melnick, thank you. All those in favor? There are none opposed. Our first order of business was to be a presentation from our auditors. Mr. Elliston has not yet signed on to our Zoom platform, so we will give him some additional time. We did have a second bit of new business to deal with in any event, agenda item 3.2, so I propose that we accelerate to that portion of the agenda and come back to 3.1 when Mr. Elliston is able to join us. So if we could then, agenda item 3.2, the CUPE local agreement 1458, a collective agreement for 2024-2026. And if there is no introduction from Mr. Given, then go ahead.
Thank you. Good afternoon, Your Worship and councillors. Yes, I bring forward today the request for decision with regards to the Sorry about that. What happened the last time? My luck. And so this is my request for decision regarding the CUPE Local 1458 collective agreement 2024 to 2026. So the recommendation is that council approve the memorandum of agreement between members of the CUPE Local 1458 and the Municipality of Jasper negotiating committees on April 16th, 2024. The alternative is to not ratify the agreement as proposed and request changes. So for background, the latest collective bargaining agreement expired on December 31st, 2023. The employer committee met with the union for a total of 11 days of bargaining in late 2023 and into April 2024. A tentative deal was reached at the conclusion of the day on April 16th, 2024. The union committee has agreed to unanimously recommend the deal to their members and is expected to ratify the agreement on April 25th, 2024. I do have an update with regards to that. CUPE Local 1458 did indeed ratify the memorandum of agreement with a majority vote from the union membership last Thursday, April 25th, 2024. The new agreement proposes the following increases to the wage grid: 2024, 2.5%, 2025, 2.5%, 2026, 3.5%. Now this represents an 8.5 increase over 3 years. The wage increases are within fair market value and in line with other settled contracts. Additional, under wages, positions currently at grid levels 1 through 9 are to be advanced 1 level higher at ratification. And effective January 1st, 2025, the step A start rate will be the B step as a start rate. These last two additional are 2.25% increase over 3 years, which brings us to a grand total of 10.75% over 3 years. Other changes in this request for decision are related to updated language and wording and other provisions in the articles that are listed in the request for decision. You'll note the strategic relevance to council is to nurture our most important relationships with those within our organization and all who share a commitment to best serve our community. And we have inclusion considerations and relevant legislation and also financial considerations. And we do believe that wages and compensation proposed for 2024 will be accommodated within the budget allocations approved in the 2024 budget. And the increases proposed for 2024 to 26 are projected to be fair, reasonable, and equitable to our employees, the employer, and the taxpayers of the community. If you have any questions, I'd be willing to answer them. Thank you.
Thank you for that, Ms. Fleming, and I will apologize that I did not introduce you by name, thinking that everyone was familiar, but of course, others might be viewing on our YouTube channel later, and so for the record, I will say that the voice they heard presenting that request for decision was, of course, our Human Resources Manager, Martha Fleming. Thank you very much for the report, and thank you and the team for the work that you've done in getting the matter to this point. I will open it to questions of council for Ms. Fleming. Councillor Demoda.
I don't have any questions, but just for the viewers and some people that might be new to tuning into our council meetings, just if I may, through your worship, to Ms. Fleming, just a little background on where we were at in prior to negotiations and with the union and the past steps and increases that brought us to today. And because I believe that there were some concessions, I guess, that were made in the past, understanding that we were coming out of COVID, and we've taken some steps. And although some people might think that 10 point, what was the percentage there? Just over 10%, right? 10.75. You know, that sounds like a large number, but 3.58 over 3 years when you average it out, it seems to be kind of standard where we're going. So I guess my first question was, you know, the steps getting here.
Yes, your worship, through to Councillor Demoda. To answer your question, the expired agreement wage increases were 2021 was 0%, 2022 was 1.25%, and 2023 was 2.5%. And that was a result of COVID, the 0% in the first year of 2021. And we do believe that we've come to the 2.5, and 3.5 from coming out of those years as being reasonable, and it's right in line with other collective agreements that have been signed.
It's good, and I apologize for some repetition there, but I think that you know, when you think about the work that's been done on both sides and coming to the agreement that we have coming forward in front of us today, I think that's remarkable work, and it's nice to see that both sides can come together in a conclusion like this. And I appreciate the work that's been done, not only by administration, but people representing the union as well. Thank you.
Thank you.
Councillor Kelleher.
Thank you, Mayor Arna, and thank you, Ms. Fleming, and your team. And I think this is great work. And if you can explain a little bit about the living wage and explain most of our inconvenience to living wage.
Sure. I think as council is aware that with regard to the living wage, not to be confused with the minimum wage, but employers offset the living wage by providing benefits such as dental, extended health care, The living wage takes into account other services provided at the expense of families, whether single, married, etc., with children, that can include childcare and education. We offer these benefits as part of our total compensation, and we are confident that in consideration of these benefits, that we are a living wage employer throughout this agreement.
Thank you for that, Ms. Niven.
Deputy Mayor Melnick.
Thank you, Your Worship, and through you to Ms. Fleming. In the changes, one of the items that was highlighted was that childcare services placed on 8 hours per day or 40 hours a week to allow for more flexible hours at the daycare. Will that allow for earlier opening or later closing, or was that to allow more flexibility within the operating day?
Around through to Councilor Melvin. Yes, it is to allow for more flexibility in the child care strategy plan going more in the future. That childcare services is hoping to be more flexible. Hours of work are listed and enshrined into the collective agreement. And having the daycare on 8 hours per day allows them the flexibility to perhaps open 15 minutes later or open 15 minutes earlier to accommodate the needs of parents going forward and their families. And the previous hours of work were 7.5, and now they've agreed that the unit has agreed to the 8. And we hope going forward that that's a win for parents and for our services included.
Thank you for that.
Other questions? I have just one item then, Ms. Fleming, on the second page of your request for decision, the notable changes. The top one talks about the effective date of ratification, but I take it that actually is suggesting council's approval of the ratification vote by the union, so that if council approves the collective agreement, say today, changes on the grid will take place from this date forward? Or does it backdate to the date of ratification by the union?
Ratification encompasses as well the decision today. So all parties effective today, if council accepts the request, then the ratification date will be today as the union is already ratified. And the change from the grid level from 1 through 9 is effective on ratification day. And the wage increases are effective from January 1. And the step progressions are effective January in 2025. But to answer your question, Mayor, it would be today.
Thank you. And subject to retroactive pay in some cases from January 1st of this year.
Yes,
And all of that is covered in this year's budget.
yes.
Thank you for that. If there are no other questions of councilors, thank you again for your report. Thank you again for your efforts and those of the negotiating team on both sides, on the management side and on behalf of the union. I know from long past experience that it's an arduous process. I see you had 11 days of negotiations, which can be exhausting. So I appreciate all the work on both sides to get to this point. Very happy that the union has ratified and that you've been able to come to council with this report and your recommendation for council. Very much appreciated. Councilors, is there a councilor prepared to make a motion? Councilor Wilson?
Yeah, I would be prepared to make the motion that council approve the memorandum of agreement between members of CUPE Local 1458 and the Municipality of Jasper negotiating committees on April 16th, 2024.
Thank you for the motion. Is there any debate? Does anybody wish to speak to the motion? Councilor Demoto?
I do, and I have 2 points to make, and the first one is just having served on the previous council that had to make some heavy decisions about budgets, particularly in 2020. And again, just an extension of thank you to the union for working with the municipality so that we had a workable budget in a difficult time to help us reduce, our expenses. So I know that affected a lot of people, and there was a lot of animosity in the community, maybe with not understanding what was actually happening. And I think, when you look at the progression to where we are today, again, I think that just enormous strides on both sides. So gratitude there. And then just another note of the foresight and the application of this process within our current budget. I know that there's some people that were concerned about the increase in the 9%, but this was factored in there. So progressively working with the budget and anticipation of the increases here today that we're voting on are all encompassed in there. So yes, that's going to be included in future budgets. But that this is part of that increase there. So when you look at it collectively, there's some people in the community that thought that council wanted to start with a 16% increase in our past budget, but that wasn't the case. We wanted to look at our budget all inclusive of everything, and this is one of the things. So having said that, the impact on the actual net tax envelope is probably, when you look at it that angle, isn't as harsh as it may seem when you consider this step. So appreciate it to everybody. Thank you.
Thank you, Councillor Moda. If there are no other comments with respect to the motion, I will call the question. All those in favor? There are none opposed. That is carried unanimously. Thank you again. Ms. Fleming, and presume you will be the purveyor of the news to the union. Thank you for that.
Thank you very much.
And I will inquire, is Mr. Alliston now online? Excellent. We will then return to agenda item 3.1. Today's special meeting agenda. And welcome Mr. Jeff Allison of the Metrics Group.
Awesome. Thanks for having me. Just trying to get this to work a little better. Okay. Well, hopefully everybody can see my presentation all right. So thanks for having me. Apologies for being a bit late here. So I'm here today to talk about the 2023 financial statements of the municipality of Jasper. So usually begin these presentations, I like to do a bit of an overview of an audit. So really the purpose of it and why we have it. And really it's to enhance the degree of confidence of the intended users of these financial statements. So those users being mainly yourselves as councillors, ratepayers, the province of Alberta Municipal Affairs. So those organizations or individuals with a vested interest in the financial performance of the municipality. This is achieved by us as auditors expressing an opinion. So we give assurance that numbers are free from a material misstatement. So what that means is, as auditors, we seek reasonable assurance. So it's a high level of assurance, but it's not absolute. So we do not audit every transaction that happened during the year. Also, as auditors, we exercise professional judgment, maintain professional skepticism, so questioning mind. We want to stay alert to conditions which may indicate possible misstatements, so such as cutoff. You want to make sure that transactions have been recorded in the correct fiscal period. We also want to make sure that revenue is being recognized when performance obligations or services have been rendered. And then as well as collectability of accounts receivable. So is the amount of receivable deemed to be collectible? So again, those are just some areas of possible misstatement. And then as well as critical assessment of the audit evidence. So has the evidence been altered? Or are we looking at valid source documentations to ensure balances are correct at year end? When it comes to your independent auditor's report, so at the top, we give our opinion that the financial statements present fairly in all material respects the financial position, operations in accordance with Canadian public sector accounting standards. So those are the accounting standards that all government organizations report under. When it comes to our basis for opinion, here we're indicating that our basis of opinion, we conducted our audit in accordance with Canadian generally accepted auditing standards. And those standards are the same across Canada. So whether you're a publicly traded company or a local government organization, all these standards are the same. It's the opinion framework that can be different. When it comes to responsibility and management, those charged with governance for the preparation and fair presentation of the financial statements. And then auditor's responsibility for the audit, which outlines a summary, which is our objective, which is to obtain reasonable assurance that the financial statements are free from material misstatements. So this slide here is a snapshot of where the municipality was at as at December 31, 2023. You'll see your cash position was at 25.9 million. So you saw a cash increase there of 8.4 million year over year. This was due to 6.8 million of cash being generated from operations, less about 11.8 million in tangible capital asset additions, and as well as an injection of cash in relation to new debt of 14 million. So a net change there about 8 million. When it comes to taxes and grants in place of taxes here, so you'll see your current taxes were down about 170,000 a year, so down to 305. Rears taxes were up slightly to 255, and then a small change in your allowance, leaving you with 516,000 of tax amounts still owing. We feel that your taxes, although being not collected yet, there is adequate security there in relation to property value for what is currently outstanding. When it comes to your receivables, so this was up to about 16.2 million as you saw additional receivables from government. So that includes your federal ICIP funding of 3.2 million, Canada Community Building funding of 1.1, MSI of 3.2, and then your Alberta Municipal Wastewater Partnership there of 904,000. Debt recoverable for local improvements. So you had debt repayment there in the year in relation to tax collection of 187,000. Trade AR of 2 million, and then GST of 396. Back to the statement of financial position, you have a new item here for investment in government business enterprise, which is in relation to your investment in the Jasper Municipal Housing Corporation of $10 there for the shares, leaving you a total financial assets of 42.6 million, or about a $12.7 million increase year over year. When it comes to what the municipality owed subsequent to year end, accounts payable is up to 4.7 million from 3 million. You had more additional trade payables, so in relation to work being done for the end of December there, that was invoiced subsequent to year end. Increase in holdbacks as projects were still in progress there. And then as well as other government and wages, which are in line with prior years, 347 and 192,000 there respectively. When it comes to deferred revenue of 6.5 million, so this represents grant funding that the municipality has collected but is not yet applied to a project. So at the top here, you have other deferred grants in operation, really in relation to a lot of FCSS programs there of 474,000 that came in. Of that, 211 was recognized and 624 to be spent in future periods. When it comes to your capital grants, MSI capital there, you got your 2023 funding allocation of 753,000, spent 3.4 million there on the arena and aquatic, as well as various other smaller capital items. And then Canada Community Building Fund of 293,000, where the funding there of 500,000 was spent on Patricia Street there, leaving you with 1.4 for future years. So you started the year at just under 9 million, and the year with about 6.5 million still to be spent in upcoming years. After looking at your deferred revenue there, capital lease obligation was $11,000 repayment, and then your long-term debt. So that was up to 24.5 million. You had a couple new debentures in the year, totaling 14 million there. You had repaid 706,000 in the year, and then interest paid on those debentures of 367,000. When it comes to the municipality's debt limit, so your total debt limit here of 37 million, total debt in the year of 24.5 left you with an unused debt limit of about 12.5 million. So still well within the guidance within the Municipal Government Act. And then your debt servicing limit, so how much principal and interest to be paid in any fiscal year is 0.25 times your operating revenue, so 6.1 million. Next year's debt service of just over 2 million left you with a $4 million unused portion there. After looking at your long-term debt, you have a new liability here for asset retirement obligations of roughly 575,000. So the municipality adopted Public Sector Standard 3280 this year in relation to guidance from the federal or from CPA Canada. So this is made up of various buildings, water wells within the municipality that have an additional cost, environmental costs, and associated with retiring those assets in the future. So it's not as if these costs didn't exist previously, they did. There was just no accounting section in order to recognize those within the statement of financial position effectively for this year. So this amount is measured using a present value technique. So the present value was also calculated based on the estimated total undiscounted cash flows of 2 million. So this 574,000 represents the cost to date. And then as you move towards retirement of these assets in the future, which are expected to be settled between the years 2050 and 2085, that cost will increase. And then you will see an amount working towards the expected future value of those costs to be in excess of 2 million. So that's kind of the explanation there of the ARO and the adoption that you see this year. So if you were to take your total financial assets being 42.6 million plus 37.1 million in relation to total liabilities, you end up with a 5.5 million net assets, or about $6,000 change year over year. When it comes to non-financial assets, tangible capital assets here of 74.2. So during the year, you had additions in the year of 11.8 million as you saw work on your arena and aquatic center, as well as wastewater treatment plant capital work there. When it comes to machinery and equipment there, you had trailers as well as a snowblower purchase, and then as well as a dump truck when it comes to vehicle allocation there, so making up the bulk of the 11.8 million. Your amortization expense of just under 3 million, this reflects the usage of your assets in the year. So as you purchase assets, they last 5 years, 10 years, 20 years, 40 years. You take a percentage of that cost that gets amortized into your operations as a recommended usage of that asset. So over time, if you are generating a positive annual surplus, you may be in turn recovering money or funds in relation to those purchases in order to replace those assets in the future. If you're looking at tangible capital assets, you have prepaid expenses of about 829,000. You had an increase there in your compliance deposit for the activity center, leaving you a total non-financial assets of about 75 million versus 66 in the prior year, so a $9.3 million increase. So if you were to take your net financial assets being C, add your non-financial assets D there, you end up with a total accumulated surplus of 80.6, which is a $9.3 million increase year over year, or is reflected of your annual surplus. So your annual surplus for the year comes into accumulated surplus. It resulted in an increase to your unrestricted surplus of 11.7 million, an increase in your operating restricted reserves of 1.4 million up to 3 million, about $1 million increase in your capital reserves, and then a decrease to your equity and tangible capital assets of about 4.7 million. So when you take all that into a relation here, your cash change, or the changes in your unrestricted and restricted surplus, was actually 14 million. Decrease in your capital asset component of 4.7 nets you your annual surplus of 9.3. So again, your surplus, although be 9.3 million, was mainly generated or allocated to your unrestricted and restricted surplus, with a decrease in the asset component of that amount. The next slide here represents your operating revenue. So on your statement of operations, so you'll see that the municipality had a decrease year over year, about 24.6 million versus 26.6 in the prior year, so about a 7.5% change. Really, that came from the net municipal property taxes, as in the prior year you had a $5.3 million local improvement tax revenue versus this year not having that. This year's tax change resulted in, it was a decrease in rates about 6%, but an increase in the assessment of 12 for a net 6% tax change there year over year without the local improvement levy. When it comes to user fees and sales of goods, you saw increased waste as well as daycare revenue there. So that's where you see the bump year over year. Government transfers for operating, that was up as you had more grants that were allocated for operating expenses versus capital than in prior years. When it comes to your investment income, with rising interest rates, you too have an increase in your investment income there due to that. So with the rates are helping to obtain a higher investment income. When it comes to other revenue, you had a wildland urban interface there for additional wildfire services revenue. So that was up to 676 from 318. Again, leaving you at 24.6 million. Which is about 2.2 million higher than budget, or a 10% increase there. When it comes to operating revenues, this is kind of a pie chart here that shows you a breakdown of where your funding comes from. Really, net municipal property taxes and user fees make up 73% of your total revenue, with the remaining items representing the 27%, of which 15 of that is government charges for operating. When it comes to your expenses by function, without amortization expense, you'll see your utilities here at 4.3 million. Public health was up year over year as you had additional FCSS expenses, which is also in line with the additional operating grants, and then as well as daycare costs. When it comes to general government, you had additional repairs and maintenance in there year over year, so additional cost there in the general government. And then economic development year over year, you saw a bump there, really related to contracted and general services up to 551 from 325. So that left you the total increase of about 1.85 million or 10%, and then a decrease from budget of 1.3 or 6.3%. So this next chart here kind of shows you how your budget, being the line, the dark blue being your currently, shows you how your budget was in line with your items there. So you'll see in public health, you're above budget there in relation to FCSS and daycare costs, and then also in the protected services area, slightly being over budget there. So when it comes to expenses by object, salaries, wages, and benefits were up to 10.5 from 9.5 as you filled some various positions in the year. Contract and general services was up to 5.2 from 4.2 in relation to FCSS and daycare costs there. When it comes to transfers to local governments, you see an increase there. That's in relation to the waste authority expenses of 135,000 up to 154 from 20. And again, leaving you at 22.5 million or a $2 million increase year over year. So if you take your total operating revenue less expenses, you end up with an operating surplus of just over 2.1 million. Government transfers for capital, so what grants were used to fund capital purchases, 7.2 million. So your ICIP funding and MSI capital, as well as your Alberta municipal wastewater plan there. So that left you a total other income of 7.1 million. And if you add that to your annual operating surplus, you end up with an annual surplus of 9.278 million. There was a restatement in the year. This was in relation to asset retirement obligations. So it previously set up at 71.3 million. Now it's 71.33 million, plus the annual surplus leaves you with an accumulated surplus of 80.6. So when it comes to your budget data here, so at 9.3 million, the end of the year at 8.7 for different items in relation to the venture funding that comes in, as well as the deduction in relation to your capital purchases, as well as transfers. So this is just working back to what you had for your initial budget. So in turn, you ended the year with an annual surplus of 9.3 million. Your net financial asset position is still at 5.5, so you have sufficient financial assets to meet your liabilities. When it comes to our audit finance report, just a summary here, we noted some significant control deficiency. We have no unusual accounting policies or estimates. We have some unrecorded misstatements and no significant difficulties. We're performing our work that should be brought to the attention of council. So I just wanted to thank Natasha and her team for all their help in getting us the information we needed. And I guess if anybody has any questions on this part of my report before I jump into the audit findings report, I can definitely address those now.
Thank you for that. Are there questions at this stage by councillors? Seeing nothing, I would invite you to continue, please, Mr. Allison.
Okay. Okay, so this is our audit findings report. So more of the qualitative work of what we do here. So really with this report, the purpose of it is really to promote two-way communication between ourselves as the auditors and yourselves as council. So as of today, we'll complete our subsequent event procedures. We'll obtain a signed management representation letter. We'll complete our required communication, which is what we're doing right now. And then we'll obtain evidence of council's approval. Once we have all those completed, we'll be able to issue signed audited financial statements. When it comes to changes from our audit plan, the only change there is in relation to our materiality, as we currently set materiality levels based on prior year's actuals, and then adjust those to current year once work is performed. So when it comes to materiality for this year, we use 860,000 or 4% of our operating expenses. when it comes to that. So what we're saying here is if your revenues or expenses, for example, were to increase or decrease by 860,000, we feel that a user of the financial statements, so yourselves as counselors, municipal affairs, may have a different view or outlook on the financial performance of the municipality. When it comes to our engagement team, so myself, Danny, and Dale were involved on the engagement and ensuring our services to the municipality and getting the audit done. When it comes to audit results, I'll just go over a few of these, just touching on some key points here. So the first one here is in relation to management override of control. So management's in a unique position to potentially perpetrate or manipulate the financial statements, whether due to fraud or error. So adjusting to conform to budget or potentially adjustments to increase the annual surplus. So what we do is we use data analytic tools to identify journal entries with key characteristics that may be indicative of that manipulation. We then test those entries to ensure that they are actual valid business entries. So we had no significant findings in that area. When it comes to revenue recognition here in relation to grant funding, we want to ensure that grant funding has been recognized once performance obligations have been met. So again, reviewing those, and then as well as reconciling the costs associated with the funding stream there was quickly spent on. So we do have findings noted in our misstatements. However, we have no other significant deficiencies to note there. When it comes to net municipal property taxes here, so we want to make sure that your taxes are correct based on the approved rates by council, your assessment value, which is confirmed as well. So making sure that's correct, as well as your requisition payment. So we do have a misstatement in there in relation to the over/under levy. So other than that, we had no significant findings. When it comes to salaries, wages, and benefits here, we want to make sure that employees are getting paid the correct rate based on approved approval rates there and based on the hours they're working. So do work in that area, as well as look at your vacation accruals there. So we have noted in our control environment other observations in relation to that. So we have no other findings from that. When it comes to tangible capital assets here, so that makes up a large amount of your statement of financial position. So again, we want to make sure that items that have been capitalized meet the definition of a capital asset. If you have items that have been expensed that potentially should be capitalized, so looking at those. Now, do you have any impairment on your assets? So inquiring of management of that to see if anything should be written off. So review your tangible capital asset policy. We're testing the significant additions, disposals, recalculating amortization, adjusting your gain loss. And we're also looking at what you're budgeting in relation to capital assets. So was what you budgeted for the projects that were being worked on? How were those projects funded? Making sure that either reserves, taxes, or grants are used to fund these, and making sure that's in line with what was set out. So we had no findings in that area. We just had a note here that we had adjusted in relation to asset retirement obligation restatement there. When it comes to asset retirement obligations, so this is obviously a new handbook section for us, so a new adoption. So really risk here for completeness of those assets. Do we have everything in here? Was enough work done to identify what we feel to have an asset retirement obligation attached to it? So again, looking at the scope of work done, recalculating based on estimates used to make sure it's accurate. So we had no findings in that area, just in relation to the adoption here. And then your West Yellowhead Regional Waste Management Authority. So making sure that we can proportionally consolidate that into the financial statements. So we're pleased to report that that has happened and that the consolidation has been reflected in the financial statements. When it comes to misstatements, so we had noted that we had made 29 adjusting entries in relation to the financial statements from when we started our audit. So that resulted in a decrease in assets of 1.2 million, an increase in liabilities of 167,000, accumulated surplus decrease of 1.8 million, and then a net annual surplus decrease of 189,000. When it comes to unrecorded misstatements, so these are entries that are not reflected in the financial statements. So we have an understatement of the municipality surplus of about 73,000. So it's in relation to a few things. One was to account for the over levy liability, which resulted in an understatement of 59,000. The account of timing of revenue recognition on government transfers for 44,000, and then to account for MSI operating revenue that wasn't recognized of 59,000. So again, net effect being 73,000, and with materiality, at 860,000, we don't feel that the impact of these these adjustments would have a change in any of the views of a user of the financial statement would have. When it comes to control environment and other observations, so here we have a discussion here on employee benefit obligations when it comes to vacation. So while performing our work, we had noted some employees exceeding the amount of overtime based on the municipality's policy there or vacation. So again, we just asked that that just be reviewed and ensuring that employees are taking their time, as you wouldn't want to be without certain key people within the organization there. So again, just kind of our discussion in relation to the vacation time. When it comes to your significant qualitative aspects of your accounting policy, so the one new adoption that was reflected in the financial statements for asset retirement obligation, there was 4 other new handbook sections this year, but they had no impact on the municipality's financial statements. When it comes to your accounting estimates, we feel your estimates are in line. So allowance for doubtful accounts, amortization of tangible capital assets, your asset retirement obligations. So those are accurate at year end. We also have a management letter that we'll be issuing to management in relation to non-significant items. When it comes to your appendix 1 here, so just our independence. So just an update here that we do not hold a financial interest position, have a personal or business relationship or economic dependence on the municipality. Appendix 2 is our management representation letter. So once we get a signed copy of that, again, we'll be able to issue signed financial statements. And then Appendix 3 is new and revised accounting standards. So next year, there are 3 new accounting standards. Public Sector 3400 for revenue will require some additional disclosure when it comes to revenue recognition. And then another larger adoption for December 31, 2027 in relation to Public Sector 1202 financial statement presentation, as the statement of the presentation of your financial statements will change. So currently on the statement of financial position, you see you have financial assets at the top, you have non-financial assets at the bottom. Those will now move up on the financial statement. So you'll have financial assets plus non-financial assets will equal total assets. From there, you'll see financial liabilities, non-financial liabilities, and then net assets. So the sum of those 3 will now agree to your sum of your total assets. You'll have a traditional balance sheet approach there. You'll also have a statement of financial assets, which will be your financial assets less your liabilities. You'll have a statement of operations as you currently see it. And then you'll have a statement of net assets, which will be your accumulated surplus, which are unrestricted, restricted, and equity and TCA, as well as remeasurement gain losses in relation to any fair value adjustments for financial asset or financial liability products a municipality may have. So that is it for our audit findings report. I guess if anybody has any questions on that, I can definitely take those as well.
Thank you very much for that presentation, Mr. Alliston. And I'll take this opportunity as well to thank you for your accommodation. I know that we couldn't accommodate your preferred time last week and had to reschedule it. I appreciate it's a busy time for you, but you've made time for us today, which allows us to get this done on the last possible day so that might in fact meet our obligation to submit.
Well, you did have one more day. It was May 1st for you guys. It's not the same as tax time, but yeah. We're in there.
And I want to acknowledge as well that we're in this position happily this year because of efforts by the West Yellowhead Regional Waste Management Authority, which for the first time in a great many years was able to meet earlier this month and approve its financial statements, which become part of ours. And that allowed us to get to this stage today where we might actually meet our May 1st deadline. And I know Ms. Melichuk will be happy to be compliant in that regard. So thank you for that. I will turn it to councillors for questions with one comment just for to refresh memory of councillors. We certainly are entitled to move the matter in camera if you have questions for Mr. Alliston that might relate to sensitive matters which would come under FOIP, in particular any matters relating to personnel. So that is an option for us, but I think we are in a public session and it is an open meeting. So we will proceed on that basis, but if anybody feels a need to request to move in camera so that we can ask more sensitive questions that fall under FOIP legislation, that is available. With that said, I turn it to councillors for any questions they may have of Mr. Alliston and his audit report presentation. Councillor Demota.
I guess just for me, just because there's a certain segment of the community that's scrutinizing us a little bit more right now, just on the in the area. Thank you, Your Worship, and through you. Just a question on the misstatements, particularly around the account for municipal over levy liability. Is that around below or above average for the provincial average, or is that like inconsequential when it comes to the size of our budget?
In relation to the error itself, it is just picking up the difference in the requisition payments that were paid versus what was taxed on during the year. So that difference does get adjusted for on your 2024 taxes in relation to an over under levy every year. So it just wasn't reflected in the financial statements. So again, with the amount not being of significance, we don't feel that it would change the opinion of anyone's the financial statement view of anybody. But it is common to have misstatements. I couldn't tell you the last time I think I had one that maybe didn't have any, and that's because they posted everything. So it is common within an audit that you're going to have some items of they're not trivial in nature, but they're not significant that aren't being reflected. So again, it's a small net amount here of 73,000 when it comes to your total.
Much appreciated. Thank you.
Yep.
Other questions from other councillors? Well, I will jump in then, Mr. Allison.
Yep.
I have questions that they are actually related to the notes to the consolidated statements. Just a couple of matters. I am looking at, I think it's page 27, perhaps on your report. It's way deep in our agenda from a week ago. It's
Note number
19.
Okay. Yeah.
And just a very small matter, but under protective services, bracket C of note 19. There is a reference there that the RCMP division in Jasper includes federal, provincial, and municipal employees. And I just wanted to have you confirm whether the word municipal was intended perhaps as civilian. I'm not sure that there's any municipal employee that is an employee of the municipality of Jasper that works for the RCMP.
I would have to probably refer that to management to maybe look at the wording there, and we could definitely make that change if one is needed before we issue the financial statements to correct that if needed.
Okay, that is the smaller, in any event, of the two matters I had. If you go back just a bit on the notes, notes 10 and 11 in particular deal with debt and debt limits, and that has been part of your review and your audit. It is also a matter of some discussion in the public realm, and I wonder whether you might be able to provide your assessment, having done an independent audit and not having any ties to the municipality and having professional and ethical obligations, and which of course you've carried out. Is there anything in your audit that would provide any suggestion that any recent capital projects are spiraling out of control? Do we have, does management have control of spending, and in particular in respect to capital projects.
Okay, so in relation to your, well, I mean, I would say in relation to your budget for what you had budgeted for capital on page 6 of your financial statements, you do have a budget amount there about 29 million, actual there about 11.8. So I would say that the purchases are in line with what is, budgeted for in order to be spending. I don't know on a project by project basis off the top of my head if anything like that, but overall it does look to be in line with what you're budgeting and projects that have been working on to be approved within your capital budget there. I don't know if you wanted me to speak on anything with the debt. I would say that it is more common with urban municipalities that debt is taken on in order to get capital projects going in a sense of services to be provided within your municipality. So you're definitely not alone in that. I see other towns that have negative debt positions because they've taken on debt and are repaying it back over time in relation to projects that they wanted for their community. So I would say in line with that, just in relation to the tax base being mainly of real property tax and stuff like that, that is a little more common. But yeah, so as for capital projects, though, it's in line with budget, but that's kind of all maybe I could speak to that.
I do appreciate that, and I appreciate you speaking as well to debt and debt limits, and that is itemized in that note 11 to your notes to the consolidated statements, and our debt limit you've recorded as about $37 million. Our debt is at about $24 million. So we have unused debt of almost $12.5 million. We also have, I think, reserves that might be in the area of $14 or $15 million. Based on all of that, is there any reason for you to suspect that the municipality of Jasper is in a financially precarious position?
No, not from what I can gauge from your financial statements. I don't see any going concern issue or anything like that. I mean, you are maintaining an operational surplus, an annual surplus as well. Your statement of financial position, you're still in a positive net financial asset position of 5 million. So again, if you're to collect all your receivables, take your cash position, and you could afford to pay off all your liabilities and still be left with 5 million. So depending on what you're, and then based on what you're budgeting for and what your actuals are, I think everything is kind of in, yeah, I mean, I think your financial position is relatively healthy, but again, you kind of get graded on your services versus sometimes how much money is there, right? So, but financially, yeah, I would say that you have enough resources to continue on and keep going. So it should be good.
Thank you very much. Appreciate that. Other questions by councilors? If not, I did have one more. I was
Yeah.
thinking perhaps somebody else would ask this, but again, mostly just because of what we hear in and about the community. And again, recognizing your independence and level of expertise and professionalism. Having done the audit, and you've had access to all of our books of account, I take it, and there's been full cooperation from our staff to provide you and your team with whatever you might have requested. Is there any evidence whatsoever, any suggestion or even any hint that any employee of the municipality of Jasper has engaged in any way in any improper conduct or financial misconduct or in misrepresenting accounting information so as to divert any municipal funds to private use or personal gain?
Well, I mean, well, during our audit, we're, performing procedures. It's not, I mean, technically, we might not discover stuff like that while we're performing our work, just in the grand scope of things. But based on the work we have done and the items that we did look at and the work we didn't note anything of that nature. But that's probably all I can really speak to on that. So again, yeah, we did not discover anything while performing our work that would be in relation to that.
Again, I appreciate that very much, and I understand that your level of assurance is reasonable assurance, which is a high level of assurance, but it's not a guarantee. But
Yeah.
if you saw any hint, you would have brought it to our attention always.
Yeah.
Thank you for that. Are there other questions from councilors? It appears not. Once again, thank you very much, Mr. Allison, for your very thorough report and for your briefer presentation today. Very much appreciated. Glad to have it, and thank you for accommodating our schedule to be here with us today.
Awesome. Yeah, no worries. Thanks for having me. I appreciate it.
Thank you.
Awesome. Take care. Enjoy the rest of your meeting. Thank you very much.
Thank you.
Thank you. Councilors, is there a councilor prepared to make a motion or two motions? Councilor Waxer?
That council accept the 2023 audit report presented on April 23rd, 2024 as information, and that council accept and approve the audited financial statements of the municipality as presented on the year ended December 31st, 2023. And should that say April 30th? I correct this one.
No, I'm here with 30th.
Yes. The presentation was today. I think that should be the date. So thank you for that motion, Councilor Waxer. Is there any debate on the motion? Seeing none, I will call the question. All those in favor? There are none opposed. That is unanimously carried.
Just have a question.
Now you have a question.
No, it's just because I wasn't gonna make a deal out of it. So in the recommendation that council accept the 2023 audit report, accept and receive are the same in this occasion, just for future reference. Okay,
Thank you for that.
thank you.
And I want to extend thanks to Ms. Melchuk and her team for assisting with our auditors to get us to this position, and happy that we've got it done before the 1st of May so that you can have the pleasure of submitting what you need to submit to the province on a timely basis this year. Thank you very much, and thank you for all the work that I know is necessary to keep our auditors informed. Very much appreciated by all of council. Councilors, it is a special meeting agenda, so that is it. Subject to a motion to adjourn. Councilor Demota, I will take that from you. All those in favor? There are none opposed. We are adjourned. Thank you to members of the public who attended live and in our chambers. Thank you for that. And for those watching or who will be watching later on, thank you. And we are done for today.